In this part, we will be talking about paper gold investment. In this section, we will only be covering one of the most sought-after paper gold investment, the gold ETFs. The main key point of this investment is that you are not required to own the physical gold, only contracts. So what is it? Let us recap for a while. Previously, you've learned how investing in business means that you do not actually own the product or services of the invested business. Thus, one way to redeem the fruits of your investment is through cash, not the product or services of the business. Paper gold investments work in a similar way. Let us take a closer look at gold ETFs. Despite the productive rise of the asset, the goal of ETF is to simply track its rise and never to surpass it. You are buying a form of commodity, a contract that encapsulated around gold. It is an investment designed only to track and reflect the price of gold. So, how is it beneficial? Remember how gold is against inflation? So, if one of your investments is affected by the dollar's downside, purchasing of gold ETF may aid you to hedge that loss. Plus, it is one of the easier ways to make an investment in the gold mining industry if you are interested. The downside of gold ETFs, however, if you seek to own a gold asset, you cannot do so using gold ETFs. You will not receive the gold itself for your funds, only cash. Some of the most popular gold ETFs available is the SPDR Gold Shares and iShares Gold Trust. SPDR Gold Shares has up to 9,800,000 shares with a low expense ratio of 0.040%. iShares Gold Trust has up to 8,900,000 shares with a low expense ratio of 0.25%. However, you are recommended to invest only on the physical gold rather than paper gold. Paper gold investment requires additional understanding in stocks and funds. Although it is part of gold and silver investment, its true nature belongs to the world of the stock market. If you do not have this ability, refrain from investing in paper gold. This is because gold ETFs hold a lot of questionable assumptions over their gains, and this would pose many risks on integrity.